It's September 7th, and this is, of course, the video log that takes 30,000 to a million. And, whoa, a million sounds like such a big figure now that I say it so casually. But after I take you through the account and show you what's up and where I'm sitting at right now, what I want to talk about is the recent analyses by people, by analysts and other individuals that are calling, the stock market overpriced, especially something like Apple. And I wanted to kind of lay down a case as to how they might be wrong and why some of these valuations may be justified. Now, it's kind of crazy for me to speak that way because the market's just, especially these major tech stocks, have just gone up like, 5 million%. Tesla and Apple and Google, Amazon, all these companies that are kind of global, internet based, scaling companies. And if regulation doesn't massively increase on these companies, I think that there's a good case to be made that they're just starting. They're just taking off. So I'm going to go a little bit into that. But first, here we go. Oh, by the way, I have some charts, not charts, but some images I've pulled up from random articles and Twitter posts and whatnot. If you want credit for who did the images, I don't know. There's websites up on top. It probably won't show, but I can probably go back and find out if you really want to know who did all these graphics. Sorry guys, if it's your graphic, it's not my graphic, so you can just claim your own credit. Just type in the comments and say I did this, and I'll be happy to mention you. Anyway, so this is the account. I'm sitting at 122,500 right now. As always, you can pause the video player at any moment and you can check out all the relevant information that you might need here. This is, of course, the symbol ticker. This is the track price, whether it's a put or a call. This is an option, of course, option contract. The expiration date, how many contracts I have, and whether it's a sell or a buy. Virtually all of these are sells, except the very last one, which I have 3 Apple option buys, and I have sold one of them. Okay, these are my stock holdings here, my assets. Pretty flat Friday actually, overall. Alright, and this is the account tab if you need to see it. If you just gotta see it. Here it is. Okay, stocks and options, Apple, Chemical, Wheat and Precious Metals, royalty income by total return. And then equity, total equity, Apple, Chemical. Well, my biggest holdings are my biggest gainers, which is a good thing to see in an account. All right, that's enough playing around with the account here. Actually, maybe a little bit more play. Here's the weekly graph, if you're interested. 131,900 was my intraday high, and then 1 month chart. This is what it looks like. I'm still up 3% on the month, which is crazy, and then I'm up 30% on the 3 months, and then 1 year. This is the year chart, 61% up. Not bad, not bad. It was higher. I mean, I was as much as 72% up. But a large position of my account is allocated in Apple related stuff, so it's to be expected. Okay, I think it's time for me to defend Apple. All right. So I was watching some analysts, and they were talking about Apple, how it's obviously overvalued by a lot, and it's 40 times earnings and whatnot, and all these companies, and that's all true, but I think it's a little bit of a linear look. Like every time I hear analysts talk about these companies, they kind of just take their current earnings or their the trend of earnings, how it's been pretty steady and hasn't really gone up by that much, maybe like a couple percent increase and whatnot. But I'm just thinking of the potential, right? I'm thinking that as people come in, of income, especially in some of these developing countries that still have yet to develop a middle class or enough people that are able to buy the products that these internet giants offer, um, when that happens, I think there's going to be a massive, increase in profitability in income, honestly, because as these people are able to buy something like an iPhone, then they're going to have access to the Apple ecosystem, right? They're going to be making purchases on their apps. They're going to be signing up for things like Apple Plus, and that group of people is just getting bigger and bigger every year. And I think the only reason why Apple is not that widespread in India is because people just can't buy the phone, right? Only 1% of people there use iPhones. Everybody else, whoever has access to the internet, and we're going to look at a graph in a little bit, not a graph, but a little map. Everybody who uses the internet uses like Android or whatever. Now, I've got actually a lot of images prepared, so I just want to give you an overview of what I'm thinking, okay? So, my thesis here is that as incomes continue to increase globally, people who weren't previously able to buy an iPhone will, or a Samsung or an Android or whatever, Amazon, Facebook, I don't know. And so, as they come into that um, group of people who can't afford it, they will buy. A certain percentage of them will buy, which will increase the total amount of people that are using, let's say, an Apple iPhone. And then from then on, Apple is monetizing now that user, right? First of all, they'll monetize it because they'll forever be buying Apple iPhones as long as they keep their quality and there isn't some kind of mass exodus that precipitates as a result of Apple making some kind of gross mistake, which I don't foresee them doing in the near term future anyway. They've been doing a great job so far. And two, they're going to be monetizing them through all their software, right? I always talk about that Z-axis monopoly that Apple has on its consumers. And let's get into the charts, yeah? So the first one I want to show you here is, let me see if you get a good view of this. It's decent. It's a decent view. It's not going to be perfect, but basically it shows the household income, right? Real average household income by quintile. And the biggest group of purchasers of the iPhone is probably going to be that second quintile to middle quintile group. And I want that to get larger. And it looks like, it's making its way up. It's not the biggest ever, but it's eking its way up here. Not nearly increasing the income as the top few percent, but the next graph I want to show you is emerging and developing Asia, how the GDP is steadily growing, and this is in US dollars. No matter what's happening with their own currency, this is measured in US dollars, right? So it's increasing steadily each year. As you can see, some of these are projections all the way up to 2024. So it's basically going to go up 50% by then, based on these projections. 50% more GDP is quite a substantial increase. And if past this prologue, right, we definitely, looks like we're heading into that direction. Next, the emerging of the middle class. Look at this, Asia Pacific, right? There's 1.8 billion. Let me see if you can see it. It says 1.8 billion on the left here. You can't see it because I'm blocking it out. And by 2030, it's going to be 5 billion people in the middle class. Or, by middle class, let's just say able to afford an iPhone. So I don't know how many units Apple has right now, but I think like 1 billion people or something like that use, I don't know if it's 1 billion, but a very large amount of people use the iOS right now. So that's gonna double or triple in 10 years. Okay, so, and not only that, but the devices are gonna be more expensive, and everything else in the store is gonna be more expensive in the App Store. So it's quite a bit of growth ahead. This is interesting, right? So we got GDP growth year over year, and red is like 0 to negative, and everything in the gray and black is positive. So gray is like 1 or 2, 3%, and then black is like 4% or more. So as you can see on this graph here, there's plenty of countries especially Asia here, right? India, Indonesia, China, this is Indonesia right here, and then China. They're doing great, right? Their economies are growing more than 4% year over year, so that's fantastic. And that's really the biggest market that I'm looking at here. India, China, but mostly India. Mostly India because you'll see in the next couple of graphs here. Wait, did I go over this already? Okay. Next. All right, this map right here tells it all. Okay, this is 2/3 worldwide use the internet, but fewer do in Africa and in South Asia. And look at India; it's only 22%. I think these are percentages, right? Only 22% of people in India use the internet. 22%. US is 89, Canada is 90, Australia is 93. Okay, that's pretty developed. UK 88. All right, Turkey's not bad, 72. Okay, but look at Indonesia, the fourth most populous country in the world, 30%. India, second most populous country in the world, 22%. Wow, South Korea 94. Way to go. But 22%, think about all these like billions of people that are going to be gaining access to the internet pretty soon. That's still a really huge market. Really, really big. Like half the population, right? Basically, is going to be gaining access. All right, considering factoring the growth of the overall population of the Earth, is going to be gaining access to the internet over the next like 10 years. Okay, so, and this is one more thing I wanted to add in here, which is the trends of, this is very interesting, of corporate tax rates. Okay, so it's just Chile. You can't see it down here on the lower left, but it's Chile is red, and then we have like, I don't know, is that Dominican Republic? What is this? Couple country in Central America, then like I think this is Israel right here in the Middle East, and then you have like Papua New Guinea, which is completely economically irrelevant. And these are trends of lowering corporate tax rates. So everybody's trying to compete on the world stage by lowering their corporations taxes, corporate taxes, in order for them to be able to compete, right? So even the U.S. lowered tax rates, right? Look at how many countries have, the last thing they've done is lower corporate tax rates. So at the same time that the population is growing, a lot more people are coming into their ability to purchase technology, right? And then we have something like India, which has over a billion, well over a billion people, and it's going to be, gaining access to the internet and continuing to buy, and their incomes are increasing, and they're going to be buying more and more technology over the next decade, let's say, but even on, and it compounds itself, right? It's not like, and also population growth. Population has slowed, but the population of Earth is still technically growing, right? So we factor population growth as well, income growth, right, and some of these really huge markets opening up, and it's just this compounding effect, right? And not only that, but corporate tax obviously is lowering around the world. And so companies like Apple or Google or Netflix or Amazon or all these like global networks, they're going to be doing so well. The only thing that I think that is an impediment to them is rules and regulations. Like, for example, if the EU decided to all of a sudden, hey, let's tax them to hell and back, right? Or let's make it impossible for them to do business here in our European Union, and the US, let's say, follows and decides, hey, these guys are making way too much money. It's causing way too much like inequality, wealth inequality in our country, in our union. Then, they want to do something about it. So they're gonna probably chop off their wings, and so that might end. So that's a risk that I'd be watching out for. But all these analysts that are saying like, hey, look at their earnings now, and it hasn't increased in this and this long and whatever, and it's just a minor increase in percentage. Like I think the growth is still ahead of us. Like there's still a lot of growth to be had. I mean, nowadays, a cell phone is virtually a necessity. Like who do you know operates and functions in society without internet and the phone? I mean, everybody you know, I bet everybody you know, or at least almost everybody, okay? Maybe you have like some uncle that still lives in the woods, but everybody you know has a cell phone and it's a smartphone. It's not like a flip phone or a house phone. Okay, they're connected to the internet, right? They're the consumers of these companies. All right, I think I've beat this point to death. Like, there's nothing more else to say, I think, about this topic. So I'm just going to end it right there. I'm still a bull. I'm not saying that these Google and Apple can't cut another 50% off, right, tomorrow into this winter. But even if they do into the elections, which is kind of likely, actually, but even if they do, I'm going to be a big buyer. I'm going to try to catch the knife like I always do. And by the way, this isn't, just I'm just sharing what I'm doing. This isn't investment advice or anything like that. Putting your money in the markets is risky and you could lose everything, including your principal. All right. I'm going to end it right there. Peace out.